and Jamie Ingram. Omar, let me go to you first. Let's get a bit of a market sort of wrap up and outlook from you as we sort of are firmly in the second month of this year, which has obviously had its fun and games so far. One of our headlines says oil perks up as investors weigh the Iran-US talks. I mean, what defines perking up? You know, $63 perking up, given everything else
Well,
going on, or and what do you see us in the next quarter, sort of as a range for that?
so I think basically that the trend in oil prices is going to be higher, contrary to what we've been told for the last 3 months. So basically, the narrative has been, tsunami supply, 3 million barrels oversupply, all that kind of stuff. And what's materialized? None of it. So now I think we watch as analysts start, recounting, saying, well, maybe we counted 3 million, but it's actually like minus something. But in any case, we wait and see. But I think the larger picture, the macro picture is bullish. Oil is undervalued. Add geopolitics. I don't think premium comes out of oil for geopolitics because I don't think anything's going to be sorted. I think this kind of, the negotiations are like a play for time. So, we've tested $55 numerous times on WTI, plus or minus, call it $60 Brent, and we haven't been able to do it. Even with all the bearish kind of, oh my God, and we're gonna and China and all this kind of stuff I keep hearing week after week. And what does the price do? Moves up. So given a choice between a break of, let's say, consistently $70 Brent to the upside or
Mm.
$60 Brent to the downside, then my vote most definitely is $70 and upwards in a trending market, basically. I'm not a believer in counting. I'm not a believer that, you count and basically you trade. If you count plus, you sell, and if you count minus, you buy. I think prices are set by money flow. I think oil is cheap. I think macro is supportive. I think inflation is coming down the road. So I like an oil price that's trending from historical lows to the upside. So I like energy. I like oil.
Okay, all right. Thanks, Omar. Adil Khadiri, managing partner, 310 32 Associates. I mean, let's get your take on that, but from the sort of geopolitical risk premium perspective, maybe I'd like to get what your input is on where these Iran-US talks are going, and of course how that might impact oil prices, perhaps more long term than short term. But there we had a survey at the end of last week. Which one of those four would you be betting on? I.e., we're going to see a peace agreement, or we're going to continue to see the same as we have now, which is essentially sanctions, US-led containment, or something more dramatic and drastic. Are you more hopeful that we're going to see a peace agreement, and why would that be the case, if so?
I think it very much depends on, what the terms of that of an agreement would be, and really what the US is pushing for in terms of an agreement. If it's back to where we were before, which was this amorphous deal that effectively sort of gets Iran not just to address allegations over nuclear weapons, but actually involves a capitulation of the Islamic Republic, I don't think we're going to get anywhere. And the talks can continue, but you're going to end up with confrontation. So I think that geopolitical risk
Mm.
in the market isn't going to go away until we've have some clarity on that. Obviously, if it is about capitulation, and then the risks of conflict get higher. But the U.S. administration is rather unpredictable in terms of this. It's gone into these talks seemingly willing to live with a relatively narrow scope. The question is, what is being negotiated? And I just don't think there's any clarity on that. If it's about remaining stockpiles, if it's about sort of reviving something akin to the JCPOA, then I think, there's scope to move forward. But to Amar's point about geopolitical risk, I think it goes beyond that. And to your point about the longer term, is, this isn't just a one issue thing. I mean, the Middle East is going through a transition. The balance of power has changed fundamentally over the past 2 years. It's going to continue to change. You're seeing sort of changes in Syria, you're seeing changes in Yemen, you're seeing changes in terms of relations between the Saudis and the Turks on the one hand, and the UAE and Israel on the other. And you have an external factor that is the US that's highly unpredictable and going through its own sort of profound realignment. So I don't think sort of the risks in the Middle East sort of go away anytime soon. And in terms of the Iran risk, let's wait and see what we're actually talking about. But let's not forget, the Israeli strikes last summer came amidst rest. It was just before, I think, the 6th round of talks between the Iranians and the US. So talks don't mean that there isn't going to be military action. It may just be delaying it.
Okay, Jamie Ingram, managing editor at Mies. I mean, the answer. So Rad's put out there like anything could happen, and really, it depends what's being negotiated behind the scenes. Really, a lot of transition. So we should expect this sort of risk premium to remain, and it's been pretty consistent, hasn't it? Really, over the last few months, regardless. Jamie, let's talk a bit about then fundamentals and sort of oil on the water, if you like, and the forecast and the outlook for that. Beyond sentiment, beyond money in the system, as Omar was referring to. What is real supply and demand doing as we kick off this year? We've seen the IEA and OPEC both revise their demand forecast upwards in the last month, and we'll see what they'll do next. Positive outlook economically for oil?
Thanks, Diana. Yes, there's a lot to unpack there, isn't there? If we look at oil on the water, undoubtedly volumes, they are the highest level from Iran that we've seen since 2022, I think it is now. But how much of this oil that's on the water is actually effectively in the black market? It's locked out from the primary oil supply and demand balances, and so it's having a relatively minor impact on oil prices itself. A lot of this is essentially just going into strategic stockpiles in China, so it's having a very minimal impact on prices. Arguably, the situation in Iran, some people are saying that it could ultimately be bearish for prices if there is some sort of agreement. I think we're a long way from that sort of scenario, but if it unlocks increased flows from Iran into more normalized markets, that could push prices down. But that's very much a long-term issue. Going back to the issue of the IEA and OPEC, yes, they've revised up their demand forecast. They're both still remarkably disparate, very, very wide apart on where they see demand this year. And OPEC has released its assessments for the following year. The IEA is yet to follow up with that, but we would be surprised if that gap narrows considerably. But we are seeing a lot more upside potential in the oil market. As Omar was saying, this narrative of huge oversupply just hasn't been materializing in the physical market at all. We're going to see demand pick up later this year. There's stress points on supply side. There's certainly a lot of figures within the OPEC organization itself who are pretty optimistic about the second half of this year. The issue of spare capacity as well is likely to start to re-emerge in the broader narrative going forward. How much spare capacity does OPEC itself, OPEC Plus, have? A lot of questions over that. It's also very geographically concentrated, which carries with it its own set of risks. So on the spare capacity side of things, I think that's one of the fundamental issues, which is being overlooked somewhat in the market narrative.
Okay, I mean, Omar, one of the factors that was helping to prop up the demand side of crude, at least towards the end of last year, if not before, was China stockpiling. I mean, Jamie just mentioned stockpiling, but we've also had people commenting the last week that that's likely to slow down now despite the low prices, just because of internal, domestic refinery demand and margins, etc. I mean, what are you getting any indications on what we might see from a support level from China, and how important is that for the fundamentals?
Nobody has any clue about China. We keep hearing, China's going to implode and all this kind of stuff. It's just narrative. Nobody has any visibility about stocks, how much they have, how much they're building. Zero, like absolutely nothing. So, but if you look at it, if you take like a bird's eye view, you know that China is heavily dependent on oil and imported oil, which is why they do all this stuff with renewable energy and wind and solar and all this kind of stuff. So it doesn't take a It doesn't take a big brainy kind of thing to assume that they're going to store as much oil as they possibly can. Why? Because we've seen what's happened to places like Venezuela. We've seen what's happened to places like Iran. So if I was China, I'd be storing as much as humanly possible. I'd keep storing, day in, day out, build my, alternative energy stuff and store as much oil as possible, oil, gas, whatever it is. So I don't think that this, again, it's another kind of narrative that, if we're surprised that demand is so high, it has to come off because China's been building a lot, so they have to stop now. No, I don't think so. So
Okay.
it's the same. Yeah.
So that support is expected to remain. I mean, Rad, the other buyer, obviously, of crude in Asia is India, and one crude it has been taking a lot of is Russian crude. We've got a couple of headlines today saying Indian refiners are avoiding Russian oil a bit more even than last year, possibly because of the U.S. India trade negotiations. I mean, how much do you think the trade negotiations for India and for Modi are going to really have an impact on how much Russian crude it takes in? How important is that to India?
I think it's clearly been part of the negotiations. It's something that the Trump administration sort of focused on in terms of trying to curtail Indian purchases of Russian crude.
I mean, is that just for headlines from Trump's
I
perspective?
think
Does he
from the
really care if they take Russian crude? I mean, he wants oil to flow, doesn't he?
Absolutely. I think it. I mean, the complications of Trump administration policy is that the dots don't often join up. In this case, I think there is an effort to try to curtail some of it. But the question is, how much is some? We're back to again that what the parameters are and what the actual sort of goal of policy is. So I think you've seen some pullback in terms of India, but the Indians themselves, in light of the trade deal or the sort of framework for the trade deal, have sought not to emphasize that aspect, but emphasize the reduction of tariffs. I don't think Indian refiners are going to pull away completely. There's makes no economic sense, and to try and actually curtail those flows, and to impose some sort of ban on those flows by third parties is pretty much impossible. So, we're back to a situation again of another trade deal where what's announced as headlines and what the actual reality is may be two slightly different things. And in this case, what that's going to amount to is possibly lower Russian flows than we have right now, but certainly not a full curtailment of them. And I think a US administration, as you say, for a variety of other reasons, may be willing to turn a blind eye to that. The administration likes its headlines. It's got the headlines.
Yeah.
We're
No
not
shortage
even
of those.
actually at the point where this agreement has been signed. All we have is a framework, but they want the headlines, and they'll live with that.
Okay. I mean, Jamie, what about Iranian crude to China? I mean, of course, it's Iran's main buyer. We did see some adjustments last year based on sort of the financial constraints of that in terms of, third-party sanctions, if you like, on terms of the payments for that crude. But again, how much is that, do you think, playing into the China-US trade negotiations, if at all?
I'd say that's a pretty minimal part of the negotiations, to be honest with you, Diala. Yes, Donald Trump has made very clear that he wants to exert significant, huge amounts of political and economic pressure on Iran, but the China deal is much broader in its scope, much more all-encompassing than simply Iran. And I think that, as Rad made very clear there, that the US administration, it loves its headlines. I don't think that Donald Trump would want something as parochial as Iran to get in the way of getting his big splashy headline over reaching an accord with China. Yes, there has been a lot of developments when it comes to the flows of Iranian crude oil and products to China. Barely a week goes past without some sort of announcement of new sanctions on new entities from the US government these days. But the trade continues. There's a lot of oil on the water. It's taking a lot longer to go there. It's being stockpiled in floating storage for a lot longer than previously before making its way into China, but it's making its way into China still. There's a lot of friction in the system, but significant volumes are still making that trade in its totality.
And I mean, just and then going on to sort of generally the shadow fleet size also, I mean, that is again something that was meant to this year come under more stringent regulations, etc. It's sort of gone out of control. There's health and safety risks to all those sort of sanctioned ships that are not being able to be monitored. Again, do you see any change in those volumes this year and because of more stringent controls by the US or the EU?
Not really. No, certainly not from the EU. Yes, we've seen the size of the shadow fleet balloon in size over the last few years. There's very little that these guys can realistically do to curtail that. Yes, nobody wants the risk of significant malfunctions leading to oil leaks or any scenario like that in their waters. But frankly, this trade is going to continue. There's too much money involved for people to resist to continue. Sorry, there's too much money involved for people to give into these regulations. Essentially, the more you tighten it, yeah, you make it harder. You probably squeeze the revenues somewhat, but for the tanker guys, it's good money.
Okay, Omar, let's get a bit of a view from you on the products, cracks, and what those are doing, whether in Europe or into Asia. Again, with given the sort of crude price background and what those refiners, I suppose, are planning from a margin point of view. Do you see any diesel or jet support from China, for example? Outlook for China economy and what that might do for manufacturing refined fuels. What's the outlook in this quarter versus what we'd have seen a year ago, for example? Any change?
Well, I mean, I don't look at this quarter versus a year ago. I don't see how it would matter basically. So the question is, are prices on cracks supported and going to move higher, or are they basically, are people going to sell them? And I think they are supported and they are going to move higher. You have a supportive macro background, as I've been saying. PMI numbers coming out are all supportive. So you would think that people will use gasoline, naphtha, and diesel. So if I had to take a view on cracks, I would be more of a buyer than I would be a seller going forwards. And I think they're all backwardated anyway, which is another signal, as is the market in general, which is again another signal. So I'd be buying that backwardation.
Okay. Brad, I mean, sitting in the States, give us your sentiment now again at the beginning, sort of as we start the first quarter or halfway through. US economy outlook, we've got the Fed chairman replacement coming up, and of course a lot of talk around that in the last couple of weeks. The whole stock market is still going up, but again, we've seen some corrections. So what is the sentiment economically from an inflation point of view as well going forward from the sort of the man on the street? Midterms coming up, where would you see that debate going?
I think that's one of the most crucial debates that you're going to see playing into the midterms, Diala. So, and I would probably differentiate between sort of where the man on the street sees it, and the sort of indicators and the performance more generally. You have to say that, obviously the Fed is keeping a very close eye on the US economy, still keeping a close eye on inflation. I think like Omar said, I think the expectation is you're going to get more inflationary pressure. But certainly you've not had some of the sort of doomsday scenarios in terms of the impacts of tariffs, even as you sort of start to look at tail effects. Those doomsday numbers haven't come through. You've got sort of unemployment numbers that are sticky, but historically not bad. So all in all, I think from an economic perspective, yes, you have the looming threat of correction in the stock market in the background. And I think, certainly as it relates to is there or isn't there an AI bubble, that's a concern. But overall, you'd have to say that the US economy is purring along fairly nicely at this moment in time. Potential headwinds, potential risks moving down. But each quarter, I think, has surprised. Oddly, that isn't necessarily playing into what the average American appears to be thinking in terms of the economy. And certainly this issue of affordability and the issue of sort of, I think, sort of the lingering effect of high inflation certainly sort of in the post-COVID period, and how that's sort of continuing to sort of impact perceptions. I think that's going to be a big political issue, and obviously one that the Democrats are seeking to capitalize on. That's their message time and again whenever any Democrat speaks. But that issue of affordability versus the performance of the regular economy. But it also speaks to income disparities. It speaks to, how different parts of the US population are benefiting differently from the Trump administration policies. And that clearly is seen as
Yeah.
as a potential Achilles heel by the Republicans moving into November.
Well, it'd be interesting to see when and what the Democrats say when they finally speak up. It feels like when they're not even there sometimes. There's our survey question today. It's on the IEA and OPEC forecast for demand. Are they likely to revise up their 26 demand forecast again in their monthly reports this week? We saw them do IEA significantly do a revision in last November, and again, of course, they've continued to be quite positive. So agree or disagree. Jamie, let's get a bit of an update from you on the shipping and sort of tanker rates and what those are doing as the year starts. Obviously, a volatile market, but again, given geopolitical and macro uncertainties. But last year we saw that market fare okay. What's the outlook for that? And are there any sort of red lights that those particular stakeholders may be watching out for?
Thanks, Tiara. I mean, to be honest, shipping rate is not something we follow too closely. There are positive signals from some elements, certainly. There's a bit of an easing of tensions within the Red Sea. There's more shipping going through there. All things considered, that should help to bring down prices from recent highs. You would expect as more traffic goes onto more efficient routes, a little bit of friction coming out of the machine. But obviously there's a lot of red lights as well, Iran being the big one there. If security risks rise in the region, there'll be significant insurance premiums, that sort of thing, on traffic going into the Gulf littoral states. But yeah, shipping rates is not something we follow too closely, so I can't give too much on the way of insight on that one, I'm afraid.
Okay. Omar, let's look a bit at gas again, where we are in the middle of winter. We've had a freezing US month, if you like, snowstorms, etc., as usual, perhaps for January, leading into Feb. But last time we spoke, you were saying that gas is actually underpriced and still has a way to go. What's the outlook for that?
Well, I mean, gas from the beginning of the year had a huge spike up, and then the prompt contract expired. So if you look at a continuation kind of chart, it had a huge spike down again. But again, I think, anything to do with energy, anything to do with gas, anything to do with oil, anything to do with products are severely underpriced in real terms, whether adjusted for inflation or adjusted for any other kind of asset. They're all severely underpriced. So the question is, do you wait to buy or do you buy? But I don't think the question is, do you actually sell and look for, prices to kind of hit bottom, get a shovel out and start digging? So directionally higher. At what point you buy, I think, is the argument. So I don't think you're going to see massive selling. So directionally higher for gas as well.
Okay. Rad, we haven't talked to you since early Jan about Venezuela. That's kind of seems to have gone a bit quiet from my perspective. Anyway, there's still headlines. We've had lots of other headlines coming out of the US, Epstein, etc., which have dominated people's attention, more in more recent weeks. Where are we on that front? I mean, is the US still selling and taking Venezuelan oil like it was when it first went in there? And again, how is that sort of impacting, do you think, market dynamics? And also OPEC, if you think it is going to have an impact on that, on the group as the year progresses?
Well, in terms of market dynamics, I'm not sure that sort of Venezuela is going to be a factor. I mean, fundamentally, the market is waiting to see when you get more volumes back, and that's going to take some time. And we're still in the early stages of that. We're still, in many ways, in the planning stages of that. I think Secretary of State Marco Rubio's testimony in Congress a couple of weeks ago was very telling and quite astonishing as to the sort of degree to which Venezuela planning and for the oil sector, but politically more generally, appeared to be a work in progress. We now have this system where the US collects money, it's deposited, or the money is deposited in a Qatari account. That account is then sort of, revenue is then returned to the Venezuelans, but the US has to sort of sign off on why that money is going and what it's going to be spent on. So I think that system has been put in place. I mean, I think the administration is very happy that sort of Venezuela's out of the headlines. And it is sort of part of the ADHD of this administration, that it goes from issue to issue to issue. And again, dealing with the headlines, but not necessarily having a good plan for the substance. So I think, there's a lot to come in Venezuela. Obviously, you've seen some changes in terms of the hydrocarbon law. There's efforts to push for foreign investment. But from an oil company perspective, Venezuela is still sort of very, very high risk with very few US guarantees, certainly very few US government guarantees standing behind the administration's efforts to increase investment and to increase output. So I think from a market perspective, and even from an OPEC perspective, this is going to be a 27, 28, 29 question. It's not going to be a 2026 one. And again, as with all regime changes or even partial regime changes, they tend to be slow burn. Certainly over the sort of course of the first 2 years, and they tend to throw up a lot of surprises. So I think sort of Venezuela is a story to keep an eye on, and one where the current quiet and the current apparent stability is something that sort of masks a lot of activity beneath the surface and a lot of uncertainty still beneath the surface.
Okay. Jamie, I mean, let's talking about sort of dollars and revenue. I mean, oil prices have obviously taken a hit in the last few months, and the average for the year ahead is being forecast to be, around $60. Let's talk a bit about GCC economies and countries like Saudi Arabia, in particular, obviously, who are leading OPEC as well, and policy there. What do you think they're thinking as we start 2026, facing this average oil price going forward and the impact on its economic planning and its Vision 2030 as well? A lot of cutbacks already announced in some of the bigger projects.
There's a lot of cutbacks, a lot of rationalizations, but I think that a lot of those cutbacks would have been coming regardless of oil prices, frankly, when you look at some of the projects that have been scaled back and the extent of the ambition that was going into them and whether that was ever going to be realized by 2030 anyway. I would say that when it comes to the oil prices and their economies at the moment, they're taking a bit of a longer term perspective on this. Is the outlook for 2026 great? No, they'll have to tighten their belts a little bit, but is that setting the scene for price and revenue increases in 2027, in 2028 and beyond, which is really what these economies need? That's the gamble that they are taking. That's the strategy that they're embarking on. Yeah, get through 2026 when the outlook is mixed. Probably won't be as negative as some of the pessimists have been saying, but then you get to a tighter market beyond that with higher oil prices. The revenue taps are open once again. So I think that they're looking really through 2026 into 2027.
Okay, Rad, back to you, just sticking with OPEC and one of its sort of members, which has kind of been a little bit exempt in a way from the quotas, Iraq, and also an area that you follow. I mean, again, what's the outlook for production there, given the sort of slightly more positive news in recent months on the Kurdistan pipeline, etc.? But do you see sort of what's the production sort of outlay there, and in terms of generating revenue for the country?
I'm not sure that Iraq has been given a quota pass of late. In fact, I think it's one of the issues. Iraqi production certainly has been one of the issues that OPEC has paid a great deal of attention to. It's along with Kazakhstan, has been in the naughty corner from time to time.
Yeah.
But I think moving forward, Iraq is no different from any other sort of oil producing country, and given the how much it does rely on oil revenues, so it probably is in one of the more acute situations. In terms of foreign reserves, in terms of its current account and balance of payments, the country seems to be in an okay position. But you're seeing the same sort of fiscal pressure start to impact things, and I think from an oil perspective, the fact that the government announced, or the Ministry of Oil announced about 2-3 weeks ago, that it was reducing capital spending in the oil sector this year gives a sense of, you know, the belt tightening. So I think from a production point of view, it's probably going to be much the same. It gives a chance for Iraq to align with its OPEC quota sort of better as the year goes on. But it's going to be another country, I think, that faces some quite difficult fiscal questions, and obviously sort of overlaid on top of a relatively still unstable domestic situation. You know, we have protests that took place in Baghdad and Basra just yesterday over new revenue generation measures that the government's introduced. So one that one that's going to be feeling the pain, and possibly sort of more than the Gulf states will, certainly.
Well, I mean, and Jamie, just back to you on that, just to wrap up. I mean, from other Gulf states, for example, UAE, who had ambitions, obviously, and obviously in its planning to increase production, and was at one point promised a more favorable quota, but it did sort of take a step back last year for the greater good of the group, if you like. Any update on that in terms of, given also the outlook for prices and what OPEC has done recently, which is to stop adding more oil?
Well, the UAE's been sitting pretty. They've had their own quota increase carve out separate to the rest of the group, and 2026 is going to be the focus within OPEC Plus is going to be on this new mechanism for assessing capacities, which will then feed into a more technocratic method for setting quotas from January 2027 onwards. That's the theory, at least. And obviously, under that system, if the UAE is accurate in terms of where they say their capacity figures are, then they should be in line for quite a significant improvement in their quota position within the group. So they should be happy with the direction of travel this year on that front.
Okay, we'll wait and see what happens. Thank you so much to Jamie and Raed and Omar for joining us this morning. Have a great remainder of the week, everyone. All the best.
Thank you.
Thanks very much.
Thank you.